So, good evening, everyone. I'm Dr. Nkem Izamama, and I want to share a story with you tonight. And it's my story, right? And how it led to this incredible opportunity that I believe can be the starting point to your financial future as well, or the change that you're hoping to happen. And I'll tell you the story, and then I'll tell you kind of a little brief synopsis about why we're here. And then we'll talk about the opportunity, which all of us are excited to hear about, which is the rise. But 4 years ago, I was exactly where you are today, sitting at a webinar just like this. But even more than that, right? I was a successful physician. I was working long hours. I was helping patients, but I had this nagging feeling that maybe there had to be more, right? I knew that all I was doing was essentially trading my time for money. And I knew that it wasn't sustainable forever, right? And so that's when, through a lot of research and trying to figure out what else I wanted to do, I discovered the power of real estate investing. But it's not just any real estate investing, right? It is strategic, methodical investing that could create passive income while I continued to serve my patients. And that was my story, right? Tonight, I kind of want to take you on that journey of where I was and how I got to here and how the rise plays a role in that. So I said it before. If you have any questions at all, any step of the way, if you have questions, please toss it in the chat. I will make sure that I get to all the questions at the end. So before I dive in, right, I just want to take a moment to address something. As accomplished professionals, you understand the value of doing your own due diligence, right? So all the information that I'm sharing with you today is exclusive for you. And I'm excited to share those opportunities, but I do encourage you to review them with your trusted advisors, because that's what us sophisticated investors do. We take the information, we digest it, and we ask the necessary questions before we make our decision. So let's dive into what really matters. So when I first started, I made every mistake that you can imagine, right? I looked at deals that made no sense in the beginning of my real estate investment journey. And I got caught up in the excitement, and I didn't really understand all the fundamentals. And because I was really thrilled at the idea that like we could build wealth and we could do it through real estate investing. And so I maybe got excited in the beginning and I didn't do all my due diligence like I was supposed to. But here's what I've learned from where I was to where I am today, right? Real estate investing is not just about luck, and it's also not even about timing the market perfectly, because none of us can really do that. But I have learned in the last 4 years that it's about education, it's about systems, it's about having the right team in place, and those people around you, they really truly matter. So what did I do? I spent significant amount of time studying. I analyzed hundreds of deals. I flew to different markets. I walked properties. I understood. I met with operators. I met with fellow owners, people who were running these businesses. I learned from people who had been doing it successfully for years, because I knew that one day I would be sitting here telling you about opportunities that I felt would best suit you. And slowly over time, I started learning the patterns that successful investors recognize. And I want to share that with you today. But I also want to share with you kind of the reality of what it takes, right, to find those exceptional deals in today's markets. I will say that in the last maybe 24 months, right, our team, it's my team and I, we have reviewed over 1,800 deals, and we have done detailed analysis on over 500 of those potential acquisitions. We've submitted offers. We've submitted tons of offers, but I can tell you more than 30 offers have been submitted. And from all of that work, right, we successfully closed on 3 properties. And why am I telling you this? Because what I'm sharing with you tonight, right, I want you to understand how I got to here, which is talking to you about the rise. And I want you to know that it's not just another deal, right? It's the result of an exhaustive process of finding, of analyzing, and securing opportunities that most investors never see. And this is sort of what it looks like. And this is truly what separates successful real estate investing from just gambling, right? You know, if a deal comes to your table, you might be like, I'll do this one, or I'll pass on this one and do the next one. But when you understand the amount of work and truly the thorough diligence that goes into it, then when a deal is brought to you, you will understand it and it makes a lot of sense. So One of the most important lessons that I've learned is that you cannot do this alone, right? When we acquire a $50 million deal or $25 million deal, it's not done alone. And successful real estate investing really requires a team. Our internal team, our external team, our partners, and is each person bringing their own expertise to the table. So I want to introduce to you some of the people that made some of our acquisitions possible. We 100% have strategic partnerships with Excite Capital, and it's a team led by Dr. Julius Oni. He's an orthopedic surgeon. Leslie, who was a former CRNA, and Tenny Tolafari, who brings cybersecurity expertise. But these three gentlemen have acquired $217 million in real estate investment opportunities that they've brought to their investors over the last 6+ years. We also partner with EM Capital, that's led by Chris Lento, and he is an expert asset management and manager. So he knows how to manage properties, and that's because he has over 20 years of experience managing properties, large apartment complexes. And also Brad with Crest City Capital is one of our strategic partners, and he has facilitated over $132 million in real estate transactions in the Northeast area. So I want to tell you that these people, along with us, hold a world of experience. And so this journey that you're seeing me on, kind of telling you how I started to where I am today, is not just mine anymore, right? It's our journey. And I talked to you about our partners, but I also have an amazing team, internal, our Phoenix team, who just makes work so easy. We go every day, we acquire deals, we build relationships with brokers, we make sure that our investors are taken care of as we continue to look for the next best opportunity. Like I said, right, this is our journey, you and I, and that collective expertise, right, between all of us is what allows us to compete with some really large institutional investors and to secure deals like Grove Park View, which we just closed about 3 months ago, and deals like the Rise that we're bringing to you guys today. Let me tell you a little bit about Grove Park View. It is our $49.1 million deal that we closed. And I want to show you the systematic approach of how we achieve that, right? And it's just one deal, but that's how we do every single deal that we actually bring to our investors, that we secure and we take to the finish line and we continue to manage, right? So 3 months ago, we acquired Grove Park View. And it was 268 units in Gwinnett County, just outside of Atlanta. And it wasn't by luck, right? It was a result of everything that I talked about, right? It was months of analysis. It was a lot of months of really analyzing deals. It was relationship building between the brokers, between the sellers, between our attorneys, accountants, our just like the whole team, everyone coming together, right? And then at the end of it, it was strategic positioning. I will tell you that that was probably one of the hardest things that I did and that we did as a team, but it was very worth it. And here's what makes me excited to share Grove Park View with you, right? Is that so we just closed in March, and our investors are already about to receive their first quarterly distribution next month. Not in a year, right? Not someday, but it's just around the corner. And when I started this journey 4+ years ago, right, I dreamt about being able to provide real, consistent returns to a community of like-minded professionals, and it worked. And that's the system that we continue to use. And now, I'm bringing you an opportunity that is just as amazing as Grove Park View. So you might be wondering, right? You're like, Nkem, why should I consider investing in real estate, and why now, right? Aren't we in a little bit of uncertain times? I've heard investors ask me that question, and they've said, it seems like the market is a little shaky, but that's exactly why now is the time. And I want to share with you 3 forces. I'll get to the Rise, I promise. But I want to share with you 3 forces that are creating opportunities that we haven't seen since 2009. The first one is this massive wave of distressed commercial real estate that's hitting the market. So in the last maybe 3 to 4 years, right, a lot of deals were happening. And so in the next maybe 18 months, there's over $1 trillion in loans that are maturing over that time. And these are loans that were taken from 2021. And many of these, they were loans that were originated with interest rates that were near zero, right? They were bridge debt, so they were floating debt. And a lot of them, the interest rates were like very, very minimal. But now these owners are facing refinancing, and they're refinancing at today's rates, which are 3 to 4 times higher than their original loans, right? So they can't afford it. And so a lot of these properties are what we call distressed, not because they're managed poorly or they're bad properties, but they truly just can't afford their mortgage. So what does that do for us, right? It creates opportunities for investors just like us who have access to capital and who can move quickly. So remember, I told you those three forces are kind of where we are right now, right? So we have that, which is all these distressed properties. And then secondly, right, we have institutional investors. So these are the large investors. So think like BlackRock, think Blackstone, think Brookfield, and they are sitting on a record amount of cash, something that we call dry powder, right? So they have over 500 billion of just cash that's sitting on the sidelines that they're waiting to deploy in real estate, in those distressed assets that I talked to you about, right? And that's the thing. They have a ton of like opportunity funds. They really want to just target it at distressed assets. And this is not speculation, because if you read the news, if you search online, you see that it's been announced and it's committed capital, and they're just ready to hunt for bargain. So that's another thing that we're dealing with today, right? That's why I said now it's kind of the right time. And I think the final shift is there has been this fundamental shift in how Americans have access to housing. And I want you to stay with me, right? I told you about the rising interest rates. So with interest rates that are rising and home prices, they've pushed homeownership out of the reach of a lot of millions of American citizens, right? And so people who could buy before, they truly can't afford. But housing is a basic human need. So everyone needs a place to stay. So what used to be like temporary housing, as a plan to then go and buy, as like the big American dream, a lot of people are now lifelong renters. And studies have shown that millennials, right, some of us are, we don't want to buy anymore, right? We want to rent, or we want to push buying to later stages in life, especially with the concept of like work from home or work from wherever. You don't have to be in one location. And that idea becomes a little bit more enticing. So all of that has resulted to more renting, right? And like I said, it's not a temporary choice anymore, but it's this long-term reality that a lot of us are thinking about doing. Also, baby boomers, some of the people on this call, they don't want to they don't want to live in big houses anymore. They want to start thinking about selling and moving into apartment communities. So it's not a temporary blip, right? It's kind of how generational restructuring is happening in the US. And that's how people are now accessing housing. So that's something that is so important. And where are they going? They're going to apartment complexes, which is what we are investing in. So that's why this all makes sense, right? I told you it all makes sense. So now, again, you might be thinking, right? Okay, so these institutional investors, they have all this money. How do we compete as the Davids, right? How do we compete against the Goliath? Our secret weapon is our community, and it's you guys here, right? We move faster, and we have relationships that money just can't buy. And a lot of institutions, they have investment committees, and they take forever to make all these decisions and lengthy approval processes, but we make decisions very quickly. We do our due diligence, but when we find the right deal, right, we don't overlook it. We make the purchase, and then we bring it to our investors, to our community. And I know, and I've seen it, I saw with Grove Parkview, we can move with agility. And even if it doesn't fit perfectly, right, into like a spreadsheet, we use our own spreadsheets, we do the math, we do the numbers, we make sure that it makes sense, we are conservative, but then we can get back to the sellers and say we want to buy. So we have access to some of these opportunities that the bigger people, that they miss, maybe because they're too small also, but then again, we can move faster. So we talk about our relationship, and I keep talking about community, right? We also have relationships with brokers, with other owners, with other operators, and again, other professionals that bring all of this, that help bring this deal to the finish line for you guys. And that's really how we secured the Rise. So the Rise is an off-market deal, which means that it didn't make it to market for all of us to compete. The brokers saw us, they saw our whole team, and they said, you've closed other deals. Let's see if we can get this deal to the finish line. And we said, absolutely. We did the work. We underwrote it. We went to view the property. I'll show you the video. And then we knew that we could move very decisively. So here's something I realized very early in my journey that I want to share with you, right? As busy professionals in the healthcare space, out of the healthcare space, we have this unique advantage that a lot of other investors don't, right? We have steady income, and banks will love that. So, and then we have these professional networks that really are filled with high earning individuals, people who want to diversify, people who are thinking about outside of their 9 to 5, how to build wealth, right? And so there's a lot of us here, even in this call today. And that's why it's important. That's why this network is very important. And more than that, right? We continue to serve, whether you're in the hospital, you're a patient, or, you're an accountant or a lawyer, but you're still able to serve your community while you're able to grow wealth outside of what you do. So this isn't about replacing what you do, right? It's about leveraging what you've built, and then using that to help you create financial freedom. And the Rise is poised to be this vehicle for you to be able to do something like this, right? Think about getting exceptional returns, and we'll talk about numbers in a second, without becoming, full-time real estate investors, because you're not active, you're truly passive, and you still get to do what you love. So as I wrap up, I told you I'll tell you a little story, right? This slide is a little busy, but the one thing I want you to take from it is a quote that Warren Buffett said long time ago, right? Is to be fearful when others are greedy, and to be greedy when others are fearful. A lot of studies will show you that investors do the exact opposite, right? But that's not you, because you're sitting here and you're listening to me. Those people, they buy at peak excitement and they sell at maximum fear. Right now, right? I told you that I've talked to investors who are a little afraid of the market. And also they're reading all these headlines that say housing crisis, you're seeing all these things that kind of dominate the news. But when you understand the cycle and you recognize the right time and the right moment, you want to position yourself for the next decade of growth, right? If you ask me, when was the best time to invest, I would have told you, I wish I did this 10 years ago. I wish I did this 15 years ago. But the next best time is today. So position yourself for growth by thinking about making that decision today, when maybe other people are a little fearful. So this is kind of window of opportunity, right? I told you 12, 18, 24 months, interest rates have peaked. We see distress in the market. Institutional capital, they've raised their money, but they haven't necessarily deployed. And so maybe by 2026, we think 2025 towards the end, which we're getting there, and then 2026, a lot of these deals, a lot of these assets would have been absorbed already. And so this is our opportunity to kind of acquire these institutional grade assets. So these assets that maybe only them would have been able to acquire, but we're doing it at a discount. And so that's what puts us in the same playing field. So we stand kind of at a fork in the road, right? And you have two paths right now. The first is just stay and become a spectator and just take all this information in and say, maybe I'll do it later. I'll watch from the sideline, and maybe opportunities will pass. Maybe this is just not the right time, right? But you can be a spectator, or you can be a participant. So recognize the patterns that I talked about, right? Understand the timing of why maybe now might be the best time, and then position yourself for the next decade of growth while that window still opens. So this is the opportunity that I'm excited to talk to you about. And I just want to say it is open only for accredited investors. But all of the reasons why we've been kind of talking about tonight, why you joined me, is to talk about the Rise. So about a month ago, we won the offer to purchase the Rise. It's a 128 unit. It's Class A. So it's brand new, 2022 build. It's in Conyers, Georgia, which is just less than 30 minutes from downtown Atlanta. And this property kind of represents everything that I've talked to you about, and all the things I've learned in strategic real estate investing, right? We acquired it at a significant discount in a high growth area, and tons of major employers and jobs are being created in that area. I talked to you about kind of how it's poised for exceptional returns, and I'll tell you some numbers in a second. But we have created opportunities like this, right, for members of our community. And I want you to be able to participate in these kind of deals that maybe at one point was only available to the ultra wealthy. But now, we have access, which is something that I think that we have been lacking for a really long time. So I want to show you exactly why this opportunity is so compelling. And one thing I'll do right now is, my team, I'm going to have one of our team members put up the link. This link is to our secure portal. And the portal has all the information that you'll need. So I will, I'll go over a significant portion of the deal and all the details. But when you get access to the portal, this is a secure portal, you're going to go in and create your own username and password. Inside the portal, you have access to the full investment deck, which goes over a lot of what we've talked about, but even in more detail. You also have access to the subscription documents, which is the official documents that were created by our attorneys. That is the agreement between you and I. So you have access to that as well in the portal. And if you click on the link, I think it should be made available top right. All you have to do is just click sign in, and then you're going to create an account. And from there, you'll see the rise and you'll kind of be able to walk yourself through it. But if at any point you are stuck, please feel free to reach out to me or any member of our team, and we'll be able to walk you through the next steps. I actually encourage you, as you're thinking about this and as you go in to get all the information, even before you sign the official document, even before you wire funds, schedule a meeting with me. I'd love to, I want to make sure that your goals align with what we're doing here and make sure that you are in the path to grow, especially in line with what your goals are. So we're also going to put it in the comment section as well. So if you're using your phone and it might be hard to click on it, we're dumping it in the comments as well. Okay, so I want to play this video. I hope it works. Let's see. We are at Conyers, Georgia. We're at the Rise, and we are acquiring this amazing asset for our investor community. Today, we are doing due diligence, and the entire team is here. So we are looking at every single property. We want to make sure that what we assumed on paper is actually what we see in real life. But we're also doing financial audits. We're looking at the rent receipts. We're looking at everything on paper as we compare what we're about to purchase. So we have been here since 10 a.m. in the morning, and honestly, the feedback has been amazing. What we have reviewed has been really good. As much as this is important to us at Phoenix Capital, we have to make sure that our investors know exactly what they're getting, what we're purchasing. So I've had the opportunity to go into some of the units and actually walk the units. And this is a pretty new property. It was built in 2022. I can already tell that our maintenance cost is going to be low. So if you guys don't know, this is probably really exciting. 20th Century Fox and Warner Brothers, they are actually expanding their studio to Conyers, Georgia. Because one of the things that we look for is the people who are coming into the area. So the types of jobs that are growing in the area and the types of opportunities that are coming. So the fact that these people are here is very exciting because it is building the Conyers, Georgia population. And those are the types of things that are very important to us as we think about location and when we do market analysis. What's even better is proximity to Atlanta. So it's less than 30 minutes away. So people can actually live here and work downtown, and the commute is barely anything. For me, this has been such an exciting opportunity, and everything that I have seen has reinforced exactly what we're doing at Phoenix Capital. I am truly excited to bring this opportunity to our investors because this is just yet another way that we can grow wealth through passive income in real estate. Okay, so here are the fundamentals. We are acquiring it for 25.3 million, which is around 22% below what current replacement cost is. So that's if we were to build it today, what it would cost us. We're paying about 22% less. And we got very favorable financing. We're purchasing it at 5.05%, and that is fixed. So throughout the life of the deal, that's what we're purchasing it. And we are at a conservative leverage of about 63%. But the real value is in the location, which you kind of saw in the due diligence video of the things that are around Conyers and the reason why it's positioned for growth in the next 5 to 10 years. Okay, so let's talk about returns. I want to spend a little bit of time on the returns, and I also will show you kind of a sample of what an investment looks like. So we have structured this investment into to kind of accommodate two different types of risk tolerances and your investment goals. So Class A, which you see on the screen, is a minimum investment of 100,000, but that is a little bit more secure because it offers some security because it's 10% preferred return, but you prioritize the cash flow, which means that if you are a Class A investor, right, you are getting your cash flow first, you're getting your returns first before anyone after we pay debt. So this is ideal for like the kind of investor who wants predictable income. But remember, you are not going to participate in the profit share at the end because you are getting cash flow first. Now, Class B is a little bit different. You have a higher upside potential. And the reason why is because you're going to get your preferred return after Class A gets theirs, but then you'll be able to participate in the profit share that happens at the end, at time of sale. So while Class A was getting about 10% preferred return, you are going to be looking at about 16.1% average annual return. And that's throughout the life of the deal. But remember, you're going to be getting most of your money on the back end, and that's different from Class A investors. But both classes, you're going to be getting quarterly distributions, and then you will get full return of your capital at exit. So that's something to just remember. And I told you I want to walk you through a sample investment of a Class A investment type and a Class B, and what that looks like from like year to year. Remember, I told you, no matter what class you're in, you're going to be getting quarterly distributions, and it's going to be starting the first year, but you're going to be getting the largest payout that's at exit when we sell. And what I want to tell you is that like these aren't theoretical returns, right? They're based on true conservative underwriting that we've done, and just the ability to execute with similar business plans that we've done in the past. So this is something that we've done, and that's what we continue to bring to our investors. Okay, so for Class A, the minimum is 100,000, and so this is a sample $100,000 investment. So remember, I told you you're getting 10% preferred return, so that's $10,000 every year, and then you get full return of your capital year 5. So you are projected to get about $150,000 of return at the end of the deal, and then that looks like 10% average annual return, and your equity multiple, so how much you put in and how much you make, is 1.5x. So this kind of looks like steady, predictable cash flow throughout the whole period because you're getting the same thing, that 10% every year. Class B is a little different. This is a sample $100,000 investment. The minimum investment, I got asked that question. Minimum investment is 50,000, but we did 100,000 for easy math, so you'll be able to see it and understand it. So your distributions are kind of ranging from year 1 to year 5. It changes over the hold period. But remember that because you're going to participate in profit share, that 80-20 split. So you keep 80%, us as the operators will keep 20%, and you will get a chunk of that at time of sale. So you will be projected to receive kind of the return. Your entire projected return is about 180,000. And that equates to about 16.1% average annual return on a yearly basis when you kind of look back. And that looks like about 1.8 times your initial investment. So if you're thinking, which one should I do, right? Or which one do I fall into? I want you to think about kind of your risk appetite, and then also think about, like, do I need cash flow today? Those are some of the things that you want to think about to kind of steer you in whatever decision that you want to make. Again, if you have questions, please reach out to any of our team members and we'll be able to help you. Okay, so one of the things that, like, as a healthcare professional, as a high net worth investor, one of the advantages to real estate investing is um, tax efficiency. We always think about, how can we get additional tax benefits? And real estate investing, especially multifamily real estate investing, you can participate in depreciation. So for your $100,000 investment, right, you're going to generate about $23,000 in tax savings over the whole period. And we fast track all of that to year one. And so you're boosting your after tax returns for any of the returns that were any of the passive income that you're getting from the property, all your distributions. That tax benefit is offsetting all of it. And so that's just something to kind of think about as you're thinking about ways to reduce your tax burden, making sure that you're doing it legally and ethically. This is a great way. So I want to talk a little bit of risk, because a lot of our investors ask, tell me some of the risk and how do you kind of mitigate it, right? I want to say this, like, while no investment is without risk, everything has risk. You're taking a risk, but it's calculated, right? One of the things that we do at Phoenix, in addition to our partners, is that we want to structure the deal to try to minimize downside. And one of the ways that we do it is like conservative leverage. So I told you that we're 63% is all we're borrowing, and we're bringing the rest in equity. So that's a significant amount of equity that we're bringing to the deal. And we're also using fixed debt. So no matter what happens to the market, because who knows, we know that we are fixed at 5.05%. And then one of the things that is really important is that we are not managing this property ourselves, right? So we have partnered with Fortis property management team, and they've managed over 10,000 units. Our plan is for them to, as we grow, especially in the Georgia market, to continue to use them and build our portfolio and beyond. So they are our property management team, and we actually meet with them every week to assess how the property is doing. And that's important. So these are some of the ways that we mitigate risk when you think about, is this something that I want to invest in? So I'm only going to talk a little bit about location, because when you get on the portal and you see the deck, we have tons of information as to why this location is so important and why it matters, right? And there are multiple reasons why, but location, like I said, is probably one of the most important. But in the Conyers area, one of the things that we're excited about is that they're actually expanding the road. So it's going from 2 roads to 4 roads. And that's just because of the amount of growth that's coming in the area, the population increase that's coming in, and the significance that it's poised for growth. So that's one of the things they're doing. Now, anywhere that you see a Starbucks or you see a Chick-fil-A, you want to be there. And they're right around the corner to our property, because they always build and they always put new Starbucks and Chick-fil-A's on a path of growth, right? So like I said, take a look at the investment deck in the portal. It has all the information. I'm pretty sure the link is still up. We also talked and you saw in the video and kind of on the deck, you'll see that like Warner Brothers is also kind of expanding, and Rivian EV Plans is moving to the area. And with that comes more jobs, right? So again, you always have to be thinking about, as you're thinking about doing due diligence in the areas that you want to invest in, make sure that, like it's poised for significant growth. Okay, so as we start thinking about kind of coming to a close, how you might be thinking, how do I start thinking about investing? How do I move forward? If this is your first one, if you're a repeat investor, thank you. But the process is pretty straightforward, right? The link, again, I'm pretty sure the link is up, but if it's not, we'll go ahead and release it again. All you have to do is log into the portal and then sign up, fill out the investment documents, and then review the deck, review the PPM, which is the private placement memorandum, which is the same as the subscription agreement. But after you do that, I do want you to, or I would like you and encourage you to set up a call with me personally or one of our team members. I want to be able to discuss any questions you have every step of the way and kind of hold your hand as you finish out the process. But when you make the decision, the last steps will be sign the subscription agreement, wire the funds, and then secure your position. I've gotten a lot of these questions, and a lot of investors don't actually know you can invest with cash, but you can also invest with a self-directed IRA. And it allows you really to use, existing retirement funds for investments like this. Now you have to use an old 401k, but not your active 401k. So an old one, let's say you left an old job and it's just been sitting dormant, you can then convert that to a self-directed IRA and use that. And we have a custodian that we vetted and that we love. So if you're thinking about kind of using your old 401k or what that process even looks like, again, this is the reason why I encourage you to join, book a call with someone on our team. And if you want to talk to me, I'm always available, and we can connect and kind of help you figure out and steer you in the right direction. Okay, so what does the timeline look like, right? We're currently in the investment kind of commitment phase, and we expect to have our final closing within the next 60 days. And then at which point we'll become owners. And then how this works, right? After we close, you're going to be getting monthly updates on the property. So how we're doing, any renovations that we plan to do, any changes on the property, kind of even like down to how much is coming in, how much is going out, all of that, you have access to that, and you'll get all that information in the monthly update. And then you will start getting quarterly distributions. Our plan is a quarter after we close, we will start giving out distributions. And so you'll be getting it every quarter until we sell. And then we will have quarterly webinars just for our investors to kind of let you know, be able to ask any questions you have, answer any questions, and then kind of just let you know the trajectory, where we're going, how the property is doing. So I want to tell you this because I want you to know this, right? Before I ask you to consider investing, I want you to know that I'm personally investing alongside with you. So this isn't just a deal that I'm recommending, right? It's one that I believe enough to put my own capital at risk. So, I want you to know that I also have skin in the game. I've walked the property, I've met with the management team, analyzed the market data, and I'm confident that the rise really represents exactly the kind of opportunity that can create meaningful wealth for our community. But more than that, right? It kind of, it's a culmination of this journey that I've been on, where I kind of went from healthcare professional to real estate investor. Everything I've learned, every relationship that I've built, as we grow as a team, as we partner, right? Every system, it's led to us finding opportunities just like this, and to be able to bring it to our investors. So that's very exciting for me. So as we wrap up, this is what the property looks like. I want to tell you this, right? If you are in the area, or if you have friends or family in the area and you want to go and take a look at it, if you want to walk it, if you want to get a feel for it, see what the landscape looks like, see what the area looks like, I invite you to come. If you want me to come with you, we will gladly do it together. But if you're in the area and close by and you want to go see it, go. I also want you to go secret shop it. So act like a tenant and go see how the front desk people are, see how our team is, or our future team that we're, that we're coming into family with. See how they are, get a feel for what the properties are, even see like the tenants, see just how the property is. But so if you want that opportunity, again, feel free to reach out to me, one of our team members, and we will make that happen. Okay, so if you're ready to take the next step, I'm here to help you. Jump into the portal, schedule after you're in the portal, schedule a consultation. I want to make sure that we discuss how this fits your overall financial strategy. And then if you're ready to move forward after that, I'm excited. We'll secure your position and then we'll get going. Now, remember this. This is truly a first come, first serve. This is a first come, first serve opportunity. We have limited spots, and since we released it, we've had tons of investors who have already soft committed, who are excited, who have gone into the portal and secure their spot. So if that's you, please don't hesitate. Do it. Reach back out to me, ask questions. Remember, it's not, when you go into the portal, fill out your information, you're not committing, right? The final step is when you sign the subscription documents and you wire the money, then you're in. We'd love to have you. But until then, you're an investor who's doing your research, who's doing your due diligence. So that's how I would kind of approach it. So this is the last slide. I just want to say thank you for staying with me till the end. And I want you to kind of go back to the beginning. And I talked about the beginning a little bit just to kind of prepare you and walk you through what investing in an opportunity like this. But I want you to remember that market timing, that perspective of, making sure that you understand what's going on in the market and kind of the history lesson of where we were and where we are today, and use that to be able to make the decision. A lot of great fortunes happen when you recognize those patterns, you understand the timing, and then you take action, even if it's a brief window, right? A brief window of opportunity that you're able to jump in. And I want to say that the rise and opportunity like this kind of fits that exact moment, right? It's a chance, again, to acquire an institutional grade asset, one that we may not have had access to, but we do now, during this unique market transition. So join us in the journey. I welcome you with excitement, and thank you so much for your time and attention today. So if you have any questions, I want you to stick around. I'd love to answer any questions that you have, and kind of take it from there. So our next steps, like I told you earlier on, right? In the past week or two, I've had questions from my investors who had questions as they've met with me and they've secured their spot in the portal and in the deal. So I wanted to run through some of those questions first, and maybe it will jog your memory if you have any additional questions, or maybe you were thinking about that question and I was able to just answer it. So I will stop here and I will end my screen share. Perfect. And then we will start asking. Okay, so what about this property made you guys say yes? So the biggest thing about this that made us say yes was one, location. So we really, when we look at where we want to buy, one of the biggest things we do when we do market analysis is location. So make sure that jobs are in the area, make sure that the population is growing. Those things are very important, because with that comes people, and they need a place to live, and so it's poised for growth. Another thing was the price. So we bought it about $700,000 below asking price, and we were able to secure that after we did significant due diligence. We looked at the property, we made sure, and then the build. So it's a new vintage. This is our newest property that we're acquiring. So it's when we're going to be doing less renovations, and it was already cash flowing. So some of those were kind of the reasons why, after doing due diligence, seeing where the location is, seeing how it was poised for growth, and knowing that we were buying it at a discount, it was an easy yes. Next question. How long? Oh, yes. How long is the investment? So we are going to hold it for 5 years. So right now, that is our plan, to hold it for a total of 5 years. What happens to my returns if you don't sell when you expect? This is a great question, and a lot of investors want to know kind of what happens. If maybe, so throughout the life of the deal, when we get closer to the end of our loan, right, we will start doing something called a BOV, so a broker opinion of value. So we will go out and our brokers will kind of search the market and see exactly what we would get if we sold this property right now. So we want to make sure that we get to our business plan, which we projected and which you have access to if you want to see that. But if maybe it's not the right time, maybe the market is not doing what we thought it would, we will do a cash out refinance. And so that means that we will refinance a property and then be able to tap into some of the equity and then be able to distribute that to our investors, so to you guys, while we still hold on to the property for an additional year or two. So that is an option on the table if we don't sell. How frequently are distributions paid out? They are paid out every quarter for this investment for the next 5 years. How much are people putting in on average? So minimum investment is 50. The average is anywhere from 95,000 to 110,000, but the minimum is 50,000. Have you done similar deals? Yes. I showed you the example of Grove Parkview that we just closed, and we've had additional deals that we've done in the past. So we have similar business plans that we use. We make it better. We fine tune it as we acquire more properties. I think I answered that one, but I think that question was how often are you expecting updates? You will get monthly updates from me. And as we start even looking at another property, right? Because we're always underwriting deals and we're always looking for the next best opportunity for our investors. So you will know when the next deal is available as our community, as investors, you get access to that. You get first right of refusal, but you will also be getting monthly updates. And then we'll do a quarterly webinar, which you have access to come to or listen to the recording and kind of walk you through in a little bit more detail how the property is doing in addition to your monthly updates. Yes, absolutely. This one is, you can go see the property. I even encourage you to secret shop it. So go look at it, see it, get a feel for it. How do I get started in investment process? Is it difficult? It's not, it's truly not difficult. And I think I walked you through it, and I see the link is right above there. So if you're doing it, it's not hard at all. But every step of the way, feel free to reach out to us. We would happily walk you through it, but it's not difficult at all. And I kind of walked through the process already. Okay, yes, I've gotten this question a ton. What does it mean to be an accredited investor? And that means that you earn $200,000. You make $200,000 a year as a single investor, or as a married investor, you and your spouse, you make $300,000. That is how you qualify to invest in the Rise. And you have made that two consecutive years. You plan to make it in the next 2 years as well. So 2 prior years, and then future looking, you're still going to make that amount. Or you have $1 million in net worth, and that net worth excludes your primary residence. So those are the two ways, either by your income or your net worth. Those are two ways that you qualify for it. Okay. I think that, are there any other questions? If there are any other questions, please dump it in the chat. I think someone's typing. You're very welcome. I'll give people another minute or two. And then if we're done, we will wrap up. But if you have any other questions, please, I encourage you to ask it now, or again, reach out, and we'd love to answer any questions. Truly enlightening. Yay, great. There's still one more person typing, so I'll just wait. Oh, thank you so much. I think one more person's typing. If it's a question, please feel free to type. Still typing. This is going to be a good question. Okay, maybe it went away. Okay. On that note, okay, great. One question: do you have to be an American or in America to invest? No, you don't have to be. We have set up a system where you can invest from outside of the United States. So if that is you, again, feel free to reach out to my team, and we will be able to facilitate and help you with the whole process. Okay, I believe that was the last question. So I want to say thank you so much for everyone who spent the hour with us. And I look forward to partnering with you guys in the very near future. Again, if you have any questions, please feel free to reach out to us and then just jump into the portal and we can take it from there. Have a wonderful evening.